Well, unfortunately, it looks like we have a trade war. Nobody ever really wins a trade war. In fact, I think it would be really wise of each of you to do a quick Google search of the Smoot-Hawley Tariff Act of the 1930s. Now, you may not have heard of this, but let me tell you, it is important. Heading into the 1930s, the U.S. was clearly in a recession. Unfortunately, a couple of senators, I believe Smoot and Hawley, wanted to protect the American American farmer, and they implemented tariffs on about 25 countries. These countries do what countries do, and they created their own tariffs. This is often referenced as what made the Great Depression the Great Depression. Yes, folks, when the Smoot-Hawley Tariff Act of 1930s went into effect, it was aimed at protecting American businesses and American farmers. Ultimately, it worsened the economic crisis, triggering retaliatory tariffs and severely restricting international trade. It is widely considered a major contributor to the Great Depression and the severity of the Great Depression. So this should not leave you warm and fuzzy. This is not a great precedent for all of us to research. On top of that, just 3 or 4 days ago, I talked about the Atlanta Fed and GDP Now that had the expected Q1 GDP at negative 1.5%. Folks, it got worse. It got way worse. It is now negative 2.8%. We went from a high of 3.9% now to negative 2.8%. Folks, that is almost 7% swing. The American consumer, the American business, the federal government has stopped spending. Q1 is going to be a negative quarter. Q2 is not shaping up much better. We may get that often called for recession. Probably the only good thing you could think of is the 10-year note, should we go this direction, will continue to fall. If GDP Now is correct at the Atlanta Fed, it would not be a stretch to think that the 10-year note will be sub 4%. Think about that. Seemingly 3 weeks ago, it was 4.8%. Now, we're knocking on the door, or soon we'll be knocking on the door of 4%. Yahoo Finance released an article this evening that I read that talked about the tariffs from Mexico potentially raising the cost of cars and trucks by $12,000. Folks, the American economy is clearly slowing down. If tariffs continue to add to inflation, we will get stagflation. That will be an environment, that is the boogeyman. The Fed cannot handle stagflation. It is the worst of the worst. They will have to pick a battle. Will it be inflation? Will it be the job market? It is going to get, or could get, very, very ugly. We already have retaliatory tariffs from China going into effect on the 10th, Canada, and undoubtedly Mexico shortly. The economic uncertainty is clearly pulling back consumers. It is now pulling back business. Not good. On top of that, we had a washout of crypto. Remember, just seemingly 48 hours ago, crypto was ripping because we were going to have this strategic reserve. Well, that is all gone. Crypto is now below where it was at the start of that. Then we got NVIDIA. NVIDIA perhaps getting their hand caught in the cookie jar. Yes, folks, for a while, Singapore, the lovely country of Singapore, was NVIDIA's second largest customer the mass. That can't be, right? Well, turns out there were people in Singapore buying on behalf of China. That's not good because China had an embargo and we're not allowed to buy these. So they were bought or transferred or whatever. There's now people arrested because of this. The 10-year note as of the close is the lowest since October, likely going lower. But, you know, a lot of you are looking for lower rates, to which I say, be careful what you wish for. Fed President Mulson, what do you say? How do you pronounce that? Mulsalem? Something like that. Labor market is around full employment. Cross your fingers. Let's hope it stays there. Recent consumer and housing data pose downside risk. I'd say no kidding. Did you see GDP Now's forecast? Recent data suggesting downside risk to economic growth. I think so. And of course, rising inflation expectation bears watching. Let me get this right. Slower growth, more inflation, aka stagflation. Lastly, we'll talk about Leon Cooperman. He is trimming his stock portfolio. This is an individual who has often been very bullish and fully invested. He is raising his cash position to 15% and selling stocks into strength. Folks, I don't know what to tell you. If you're thinking about real estate, nothing changes. Get a buy box, daily discipline, write disrespectful offers. If you're looking to refinance, I guess rates are going down. Again, a nearly 3% negative Q1 is going to probably mean a double cut. The Fed could cut 50 basis points if the economy rolls off a cliff. They do have to watch inflation. You know, you start adding $12,000 to the cost of a car or a truck. You start adding inflation to the cost of housing. The Fed has got to be nervous. Frankly, I'm nervous. Stagflation is a real possibility. Folks, at the end of the day, do me a favor, like, subscribe, comment. Please join our school community. It now has 360 some amazing folks, 6 different accountability groups, thousands of dollars in free education, and it only costs you 67 pennies a day. Yes, 67 pennies a day to get in the room with 300 plus other investors doing exactly what you are doing. I hope to see you there. Take care. Like, subscribe, comment. Bye.